Welcome back to another video, The Wolf of London. Now, some people, you might be clicking onto this channel for the first time, welcome, and if you're a returning subscriber, welcome. Anyway, if it's the first time on this channel, please do subscribe. I mean, you can always unsubscribe if you don't like it, it's free. And anyway, we're going to be looking into a subreddit called DDintoGme, DD being short for deep dive, not due diligence, even though it contains it. And yeah, we're going to look into GameStop basically. I think this is probably the least FUD, least shill orientated GME subreddit. I mean, it's got like less than 50,000 users, and yeah, the information here seems somewhat credible and reliable. But I need to actually look for myself because it has been a fair while since I've actually like looked into it properly. So we're just going to look at all the top posts that have come out today. Well, not all of them, but we're going to go through some of them at least. So let's see. A DD on how volume is see. Actually, yeah, hold on. That might seem interesting. Volume is seasonal. I wanted to offer a counter DD to the low volume leader folks. While I 100% agree that the low volume we are seeing is possible evidence of short hedge funds running out of ammo, I would like to remind folks that late summer is one of the driest periods across the entire stock market. I decided to break down the daily average volume broken down by a month, going back to 2002 when I assume GME IPO'd. The results. So here's a chart going from January to December. As you can see, volume gradually declines from January being the absolute highest, and July is like about 35% of what January is, maybe a bit more. And then it starts to increase from July to December onwards. But you can see the heaviest trading activities is the first 3 months of the year. And then when it gets to about summertime, it's dry, really, really dry. So yeah, we're in the period where activity is at its lowest. Average volume per month, you got it on a bar chart. You can see substantially the difference, like how low July is compared to the rest of the months. I mean, if you're gonna average it, it looks like April, May, August, September, October, like that 3 million, that seems like the consistent average, whereas that July month just looks so low, and then January looks so ridiculously high. Just as I suspected, July has always been the driest month of the trading year for GME. Again, don't completely unjack your tits over record lows we've been seeing. Just keep in mind that the stock market is seasonal and cyclical. My philosophy is that it's always good to have a variety of information from a variety of perspectives. Edit. So thanks to some wise comments, I was looking into the relationship to shares outstanding counts over the course of the stock. I'm working on redoing the data as percentage of total shares outstanding to provide more depth. Anyways, I'm searching articles from July to September 2019 to figure out what the hell was going on with the 13 million shares. Outstanding data point shown here. I now believe this was a mistake, and holy shit, I found an interesting little Easter egg that I've never seen before. Hold on. We expect GameStop's business will perk up a bit during 2020 and 2021 as the new console cycle with associated software updates and introductions finally gets underway. But what is happening now in the stock is about more than late cycle doldrums or even a streaming paradigm. Shareholders do not have faith in current management and have not been inspired by new leadership policies. Notably, as of the July 31st, 2019, Bloomberg reports short interest in GameStop stock as at wait. July 31st, 2019, short interest in GameStop stock at 57.22. That is basically the float, in short. And that was 2 years ago. You don't think they've added more shorts? 2 years ago. Now, hold on. Guys, we're whipping out a chart. GameStop. So that's what it is at this time today. Yeah, no one cares. We're just gonna load up on more. Hold on. What was the date? 31st of July 2019. Ugh. Apologies, I'm extremely warm. I just came from the gym. That's why, like, I'm literally sniffing. Okay, we can't zoom in, but you know it's between $4 to $3.78. So let's just average it to 3.85, 3.9. And that was the entire float shorted. Jesus Christ. If you bought in then, you'd have a 7,423%, providing you held it and you sold at a 325, not 480. If you sold at 480, that's even a bigger return. Wow. That is crazy. This is about 63% of the 90 million outstanding GameStop shares at last report. We submit that when the share prices are at or near all-time lows and more than 60% of the shares are shorted despite cash levels much higher than the current market capitalization, lack of faith in management's capital allocation is the default conclusion. All of this creates the opportunity to enter 2020 with a dramatically reduced share count along with multi-fold great impact per share for every single other achievement of management. Consider as just one example that if the turnaround is successful and if GameStop were able to shrink its shares outstanding to 30 million through share repurchase, I would love them to repurchase shares. I would love them to do that. But they've just done like a few share offerings. So I doubt they're going to repurchase shares, especially considering the price that's out. But they could, who knows. No, $157 million dividend that was just eliminated would pay out around $5.2 per share. The board deemed up to $6 per share a good price for a buyback less than 2 months ago, and the price of the stock today is nearly half that amount. We again advise the board to represent shareholders well and to ensure the execution of the remaining purchase authorization in full. Sincerely, Dr. Michael J. Burry. Check this shit out, boys. Edit 2. I've gone through the work of adding the historical shares outstanding to the data sheet according to Y charts data. Let's hope it's right. Quant apes have at it. I will redo the analysis tomorrow showing the percentage of the shares outstanding traded by month, and we will see if my hypothesis holds true. Also plan to break it down yearly to show the progression more. Here's the new post and data, folks. Alright, let's click on that. This is posted, 3 hours ago? Yeah. The stonk is dry in July. This is part 2 to my post, volume is seasonal, where I try to offer a counter DD to explain a possible... Okay, cool. Alright, dig deeper. This will be a data heavy post, though I don't think of myself... Okay, next. I've deleted all of 2002 because the IPO shares outstanding was reported as only 18 million shares in February 2002. But my data source shows the first report at 140 million shares in April 2002. Also the percent of shares outstanding traded was super low for the first year, and I didn't think it would do the data justice to have partial year in the data. The truth is, I deleted the data from the master sheet, and I don't really want to go back and add it in. I will also remove 2021 when necessary. Here is the sheet for anyone who wants to do their own studies. For starters, let's look at the percent of shares outstanding trading across the life of the stonk minus 02. Alright, so we've got a chart. what's this? The y-axis, daily percent of shares outstanding traded. You can see you got 200%, over 100%, you got 0%, and the volume kicked up from what? That's like 2021 more or less. You can tell that's January time, and that's this probably like November, that's January, and to today's date, I believe. And then we got a chart down below. Monthly AVG percent of outstanding shares traded. Okay, cool. You got literally is it what, every 3 months? Yeah. A little bit hard to see, guys, not gonna lie. Oh, that's lovely. There we go. Nope, it's like every 6 months. It's really weird. Yeah, there's no like consistency with that bloody graph there. Like May, October, March, August, January, June, November. It's like really, really scattered. As a baseline, from the 1st of January 2003 to 26th of June 2021, the daily average percent of shares outstanding traded is 3.89%. If you remove all of 2021, the average is 2.94%, a significant deviation. Now, for the reason you're here, since all stock total numbers of shares outstanding varies over the time due to share buyback, share offerings, reverse splits, and the like, we need to normalize the volume data to get a proper comparison. So I've broken it down to the volume percentage of the shares outstanding count. Okay, you got a key at the bottom, color coordination, very useful. Yellow means it's more than 3.8%. Orange more than 10%, red more than 25%, and this burgundy brown more than 50%. Now, you can see from 2018 you got a couple more that 3.89%. By 2020 it's always over 3.89%. And the first time we saw red was October 2020 at 25.10%. 2021 was where it hit the brown burgundy, and you can see it's always in the yellow still to date. May it was at 9.92%, which is the lowest of this year so far. July is almost over and it's at 3.48%. We still have a few trading days left. But yeah, you can see January and February is at all-time highs. What stands out to me is that we have really deviated from the average since 2018. Due to this, we will do some calculations and visualizations without 18, 19, 20, and 21. Percentage of outstanding traded by month. So you can see you got from 2003 to 2021 and each month, because they're trying to make sure it's year on year, if that makes sense. And as you could see, if you look at 2021, for the months that we have entered in 2021, there's a significant amount compared to the previous years, like really a significant amount. It may be declining, like we know when it gets to July, it's the driest period, and it'll pick up towards December, and then the busiest 3 months is like the first 3 months. But even if you look at March or April, let's look at April. There's still a substantial difference between that red line, which is 2021, going back 11 years, to the blue line, which is 2010. Still up like double. So you can see the percentage of outstanding trading is significantly up. Yeah, 2021 makes it pretty hard to see any historical relationship to monthly volume. Percentage of outstanding traded by month 2002 to 2020, even then, if you look at the green spikes, it's still higher than all of it, and it gets considerably higher towards like the last 4 months of the year: September, October, November, and December. October being ridiculously high, and if you looked at what was it, the previous chart, look at October, 25%. And then we got another one where it's comparing 2002 to 2017. Then you can see it looks like somewhat correlated, like there's some sort of connection. It's not like crazy, like you might have the odd year and the odd month. For instance, like November, there's pink, which is 2017, crazy spike. And January, what color is that? 2014, you got a crazy spike here, and a few other spikes like this blue one in June 2010. But you don't have nothing crazy compared to, like, let's say 2020 and 2021. Even including 2018 to 2020 doesn't give us much. So I did, like I said, after seeing the table, and cut out 2018 to the present date. July looks like the second driest month historically to September in this table. Let's average the months across all years 2003 and 2020, then 2003 to 2017, and we'll see what we see. Average monthly percent of outstanding traded 2003 to 2020. Now, what does that say? It says baseline is just under 3%, so let's say 2.9%, about 2.95, because that's 2.5%, so like 2.95. January is over 3, February is under 2.25, so like let's say 2.2, March 2.7, 2.75, 2.68. I'm making up rough numbers just from where it is roughly. Let's say that's 3.1. July, really, really low. Like February, we're talking what? 2.25. August, 3. And then September to December, over like 3.3, 3.28, something around that region. A little bit higher. Now, that's including 2018, 2019, and 2020. You go down and scroll, look, 2003 to 2017, we can see it's not like the previous chart where it's August to December, where it's pretty much all-time highs. No, it's like really, I could like waves in a way. Baseline is now at like 2.2%, I would want to say. Yeah, 2.2%. The extreme highs being January and November, and the all-time lows being like July, September, October. So February and July have been the driest months when you include 2018 and 2020, but September and July are the driest between 2003 and 2017. So July, regardless, is the driest month. Facts. July is literally the driest month. I think at this point, I've seen enough data to marginally reject my own hypothesis that we are seeing low volume this month because July is always dry for the stonk. We do now have statistical proof that July is one of the 3 driest months historically in GME. When I'm able to refresh my curiosity for the subject, I may compare it to a brick and mortar retail or ETF. A few individual bellwethers in the B&M retail markets, and of course Amazon, so we can get even more relationship. However, the power in this DD has surprisingly came from studying the highlighted table. I'll post it again so you don't have to scroll back up. Same chart we looked at before. The high volume outliers seem organic from 2003 to 2017. Since January of 2019, we only had 4 months come in below the 17 to 19 year average. So 2017, everything before that, yeah, we like not 4 months, we 5 months. 5 months, was it? Is he talking about this? That's 5 months highlighted. Anyway, whatever. We've also had the 3 months that traded a daily average of over 40% of the total shares outstanding count. I'm not sure I'm communicating this effectively. In January of 2021, the average almost the entire shares outstanding count was traded every day. Shit, that's actually crazy. I'm gonna have to reread that. Hold on. In January of 2021, that on average, almost the entire shares outstanding count was traded every day. That's knocking futs. I like how they did that. Now, I'm not gonna lie. This is why Gay Blotkin was saying the bullshit he was saying at the congressional hearing about having plenty of opportunity to cover in January. Yep, agreed. If you got that much volume, you could easily get out. It's not like the float was dry. Now it's getting dry. And the statistical footprints do support that. Obviously, there was some covering or heavy institutional accumulation going on in Q1. Like we now know, retail alone can't put those numbers up. However, the fact that the price remains so high, so liquid, but the fact that they are still paying for FUD campaigns, it just makes you wonder how deep the world really goes. Another value insight I've gained from doing this DD, in July of 2019, Barry told GME that it was a great time to start buying back shares. He suggested they buy the outstanding count down to 30 million. There's also some interesting Easter eggs in the letter. There was a Bloomberg short report of 57.2 million shares short as of July 31st, 2019. In the end, the company did significantly better reduce their share count, see below, an action which was more than sufficient in bear trapping the shorts on its own. And the NFT rumors, and we now have a fundamental setup which could create the MOAS on a publicly listed bag of dog turds. However, this is not just a New York Stock Exchange ticker turd. The raw business vision that Ryan Cohen has brought to GME board doubles down on our thesis yet again. GameStop's frenetic acquisition of distribution centers, broadening of the accessible markets outside of the video game niche, same-day shipping in most places, value in the motto, delight the customer, and let me clear my throat. Almost 2 billion in liquid cash to stack on the cause makes the MOAS a damn guarantee. So look, shares outstanding. I didn't realize it was that fucking high at one point. So I'm assuming this is like from IPO or 2003, which they believe was IPO. That straight line tells me it's like a stock split or something, or they introduced more shares. You can see it's gone up. From 2011, they just started taking away shares off the market. I don't know. They could have been doing reverse splits or buybacks all the way down. Malcolm Barry's letter, which was like 2019 July, boom, drying it out. Look at that, 2020 summertime, and then you got like, this is recently. That straight line was like the last time they put stocks into the market, and you can see it's still really, really low, like under like 72 mil. Yeah, it's really low. Wanted to include this table to show the choppiness of the shares outstanding count. I assume in real life the transitions were smoother. However, I did hard cutoffs based on the data I was presented. I imagine that the data came from filings. The hard cutoffs may skew the data very lightly. Alright, excited to hear what you all think. I'll put edits down here. Please let me know what analysis I missed or what else you'd like to see with this data. Again, here is the sheet. Make your own copy and crunch the numbers on your own if you'd like. Cheers. Wow. That's a lot of information to take in, but from what I'm understanding, July is a dry volume. To break it up, July's volume is dry. Not dry as in, okay, it's dry on a yearly bit. No. Just July in general for GameStop, it's dry. There's not much volume, so that's what we expect. This person's crunched a lot of numbers and percentages relative to how many stocks, how much shares was outstanding, and you can see like it's dry. And then this January 2021, we had so much volume that the float was pretty much, well, not the float, but was the outstanding shares was getting traded on a daily basis. The average was. So this is what the shorts could have done. They could have gotten out. But who knows? They could have been accumulating a bigger short. And it doesn't surprise me because I'm genuinely thinking with the amount of FUD campaigns from what this person said, etc., and all the things, I've seen YouTubers say they've had people make donations like $10. I remember seeing one YouTuber, he said he had someone donate $10 to basically put some sort of FUD message, and that person made 55 accounts. They spent $550 doing $10 donations to spread FUD. We've seen on Facebook those accounts talking about selling. We've seen Wall Street Bets, GME, Superstonk have shills. We've seen FUD media. We've seen so much. News outlets put in predicted articles. We've seen news networks put in the same information that's been copied and pasted across multiple news networks. We've seen so much things telling us to sell, but we don't do that. Buy, hold, and dry out the water supply. That is what is happening. My personal theory, retail buying on record low days does the most damage. I feel like these are like dealing blows to stun boss in a video game. They just hit different. If a day is on track for record low 30 minutes prior to close, I'll scoop up more. Wow, that's a badass idea. Think about it. Lower volume means your X share purchase has a larger percent impact. Also, when it comes to fudging numbers, there's less room for error with the small numbers. If record low days were retail's highest buying days, that really gut punches shorts and raises the probability of the Fed to deliver. Need someone to confirm or disprove this concept. I mean, what Ninja Lip is saying is basically like, how could I put it? If you bought 10 shares in a month, we're going to use random numbers, but smaller numbers to make a lot of sense. Let's say you bought 10 shares in January and the volume on a day was 100 mil. 10 shares. It's like 0.0000001%, like non-effective. You buy 10 shares on a day where the volume is 100,000. Like I said, we're just making up random numbers. It's still like 0.0001%, something like that. But it's more effective than when the volume is a lot higher. So that's what the Ninja Lip is getting at. So also it's talking about the fail to delivers. Percentage wise, it'll probably be harder to hide it and cover it, etc. So I think there's probably some truth to that, but it would need to be looked into a little bit more. But yeah, I think buying on the days where the volume is the lowest will definitely have the most impact to the price. I think that's probably got some truth to it. It's a good point. Today in after hours we had a rise of like $2 on less than like 20k volume at the time. I thought due to the odd lots rules, unless you're buying 100 shares, it doesn't affect the price. I'm a smooth brain, so might need a wrinkle brain to weigh in though. Why all the sub 100 share prices with 0.0 ended? Those are HFTs, which is high frequency trades. If it doesn't impact price, why do it? Thank you for your service and dedication. Unfortunately, I'm stupid ape. Alright, so the comments ain't really adding much besides that, but I don't want to overload any ape with too much information, let alone myself. That was a lot to take in, and shout out to this user, I trade paths. Shout out to you. The account's over a year, so I'll take some sort of credibility to it in terms of like there's probably some sort of truth to it. All type of information being real, you have to take it with a grain of salt, especially considering the amount of shields, FUD, and misinformation that's going along, well, not along, but going around with GameStop. So we can't just take all information in and assume it's facts, unless it's coming from GameStop itself, Ryan Cohen. That is the only stuff you can guarantee is the truth. Of course, DF3, I agree with what he says, but he's not on the board. He's not on the board. That's facts. We can't argue that. But I'm not gonna shit on him because he brought a lot of stuff to light. A lot of stuff. Anyway, gonna have a different video coming fairly soon. I hope you enjoyed this video. If you did, please leave a like. If you didn't enjoy it, leave it a dislike. Just put in the comments why you didn't like it. And like I said, if you're new to the channel, please do subscribe. If you're already subscribed, thank you very much. Anyway, take care, apes. Bye.